Look closely. Something just shifted in America's housing market, and it's not what you think. For the first time in over a decade, homeowners in some of the most expensive states, Washington, D.C., Massachusetts, and California, are quietly catching a break. Mortgage payments are falling, and not by pennies. For some buyers, it's the kind of drop that changes everything. If you've been watching interest rates climb, struggling to keep up with rising costs, or feeling like the dream of home ownership is slipping away, this moment could be your turning point. Because beneath the headlines, a rare opportunity is forming, one that might decide who gets ahead and who gets left behind in the next housing wave. This isn't hype. This is math, policy, and timing converging in real time. And I'm going to walk you through exactly what it means for you, your future, and your wallet. Let's rewind for a moment. Over the last few years, home ownership in America has felt like a race you couldn't win. Prices shot up, interest rates doubled, and for most families, mortgage payments reached historic highs. People were cutting corners just to qualify. Budgets stretched thin. Some gave up on buying entirely. But recently, a surprising report from LendingTree turned that narrative on its head. The data revealed that mortgage payments have fallen the most
I'll
in
break
three
down what
key
happened,
regions:
why it
the
matters,
District of
and
Columbia,
3 practical moves
Massachusetts,
every
and
Arizona
California.
buyer should consider right
Not
now.
by tiny
Hello,
margins,
I'm from Fast
but by
Report,
hundreds
short
of dollars
daily
per month.
real estate updates
Now,
about Arizona.
here's what
Today
makes
we're
that
looking at a
powerful.
headline that grabbed
When rates
luxury
fall
market
even a
attention.
fraction of a
newly
percent,
built estate
the
in North
effect compounds
Scottsdale's
across
Desert Mountain
decades.
sold
For
for
some buyers,
$14
this
million,
drop
a
translates
record
into
for that
savings
neighborhood.
worth more
I'll
than
read the facts, show you what the house
$75,000
includes,
over the
and then
lifetime of
move
a
into a
single
deep
mortgage.
analysis
Imagine
so you
what
can
you could do with
understand
that
how a
kind of
single
margin.
trophy sale
Build
can
savings,
ripple into
pay
the
off
rest of the
debt,
market.
or
Here are the
reinvest in
verified
property
in the
while
listing.
everyone else is still
A
trying to
2-lane
catch up.
bowling alley,
Let's look
a
at what's
home
actually
theater,
happening here.
a glass
Between
walled
July of
gourmet
last
outdoor
year
kitchen,
and July of
an
this year,
indoor-outdoor
the average
entertaining
APR
bar,
for a
a
30-year
pool with a
fixed-rate
rooftop
mortgage dropped
waterfall,
from
and a guest casita.
7.19%
Public
to
property records and listing
6.68%.
pages show the
On
sale
paper,
and the
that
detailed
might not
amenities.
sound
Why
earth-shattering,
does this sale
but it's
matter
enough to
beyond
save
one
the
wealthy
average
buyer
homeowner
paying
about
a large number?
$111
For 2
per
reasons.
month.
First,
Stretch
this
that across a year,
transaction
and
set
you're
a
saving
record for
more
the
than
Desert Mountain neighborhood,
$1,300.
meaning it is
Over
the
the full
highest
life of a
price
mortgage,
publicly
that's
recorded
over
in that immediate
$40,000
community.
that would have
Second,
gone to
it is
interest
part of
now
a
staying
pattern
in
of
your
high-end
pocket.
sales across
And
the
that's the
valley.
national
Other
average.
trophy
In
homes in
high-cost
Paradise
regions
Valley and
like
elsewhere
D.C.,
have also
Massachusetts, and
sold for
California,
record-setting
those
prices
savings
in the
are
same. Property
magnified.
includes extensive
Homeowners there
lifestyle
are seeing
amenities,
monthly payments
private
shrink
bowling
by more
lanes,
than
theater,
$200
chef-ready
on
outdoor
average.
kitchen,
Multiply
rooftop
that by
water
30
feature,
years, and
and a
you're
guest
looking at
casita. That tells us who the
$75,000
buyer
or
is
more
likely
in
to
total
be
savings.
and what they value.
Why?
These
Because
homes
when
are
homes cost
marketed to
more,
high net
every
worth jumbo
percentage point
financing,
matters more.
and price
A
sensitivity
tiny
is
rate
lower than in
shift on a
mainstream markets.
$500,000
That means a
mortgage
record
makes a
sale
far
like this
bigger
is
difference
not a
than on
reflection of first-time buyer
$200,000
demand.
one. So,
It is a
what caused
signal
this drop?
about the top tier of
The
the
answer
market.
lies in one institution.
Listings and brokerage
the
notes
Federal
released
Reserve.
with the sale
After a
emphasize the
relentless
lifestyle and
cycle of interest
location
rate
in a
hikes
private,
meant to tame
amenity-rich
inflation,
golf community.
the Fed finally
Desert Mountain
started
is a
cutting the
private,
federal funds
amenity-rich
rate again.
community in
While
North
they don't
Scottsdale,
directly set
known
mortgage
for its
rates,
multiple
their actions
championship-level
ripple
golf
across the
courses
financial
and
system,
club lifestyle.
shifting investor
It
confidence,
is built for
bond
privacy
yields,
and outdoor
and the
living.
lending
A
landscape.
community that
When they
sells
made a
not
quarter
just a
point cut
home,
in September
but access to
2025,
experiences,
it signaled something
golf,
big.
dining,
Borrowing costs
wellness,
might
and social
finally
clubs.
be easing.
That
This
helps
small
explain
spark
why homes
reignited
there can reach
optimism in the
premium
housing market.
prices
Lenders
relative
adjusted,
to other neighborhoods
buyers
in the
re-entered
Phoenix
the
area.
conversation, and
If you're
sellers who'd been
considering
sitting on the
buying in a
sidelines
community like
started
this,
paying attention again.
expect a different
Now
set of
combine
costs
that with
and
a
rules
housing
than a
market
typical
that's been
suburban
cooling for over a
subdivision.
year. And
Now,
you've
the
got
part
the
most
recipe
buyers
for an
will care
unexpected
about:
comeback.
what this
Lower
sale means
payments,
for you,
rising
whether
opportunity,
you are a luxury
renewed
buyer,
buyer
a
confidence.
primary home
Now,
buyer,
here's
or
where
an
most
investor.
people stop.
I'll
They
answer the
see
Mophie
cheaper
properties.
mortgage rates and rush to
However,
buy.
there are indirect pathways.
That's not how real
When
wealth
top-end
builders
sales
move.
increase,
Smart buyers
local
pause
sellers
and
with
ask
high-end
the deeper
listings
question.
may raise asking
Why now?
prices, which
What's
can
really
lift
happening
neighborhood
behind the
averages
curtain?
in luxury pockets.
Because this kind of drop
That
isn't
said,
random.
the
It's a
mainstream
signal.
market
It
dynamics,
tells us that the market is
inventory,
rebalancing
mortgage
after
rates,
years
and local
of
job
imbalance.
growth.
Home prices
For
soared
mainstream
faster
buyers,
than wages.
monitor local
Construction
supply and
lagged
mortgage
behind population
affordability
growth.
rather than
Millions were
luxury
priced
comps
out.
alone.
Now, with
This
rates
is an
easing,
important
the system is
distinction.
adjusting,
Luxury
giving people a
records matter
second
most
chance
to
step
luxury
in,
sellers and
but only
buyers.
if they understand
They
how to
only
use
trickle
it.
down to the rest
Think
of
of
the
it like
market
this.
over time
The best
and
time
under
to plant a
specific
tree was 10
conditions.
years ago.
Anytime
The second
you hear
best time
record
is when
headlines,
everyone
the word
else
bubble
stops
comes
paying
up.
attention.
A single
That's what's
record
happening
sale
right
is
now.
not proof of a bubble.
Let's talk about where the
Cause deals
biggest wins are
faster than
happening.
mainstream buyers
In Washington,
because
D.C.,
many wealthy
monthly
buyers
payments have
simply
dropped
step
by
back
about
rather than
$213
refinance.
on average.
This is an
Over a
informed
30-year
projection
term, that's nearly
treated as
$77,000
scenario planning, not a
$87,000 in total
guarantee.
savings.
Many
Massachusetts
ultra-high-end
isn't far
purchases close
behind,
with
with
cash
a reduction of
or
around
with jumbo
$210
loans
a month,
that require specialized
translating to
underwriting.
$75,000
Jumbo
over time.
financing is stricter,
And in California,
larger down
where home
payments,
prices
deeper
often
asset
feel untouchable,
verification, and often
Borrowers are
higher
saving
interest
roughly
rates.
$209
For buyers who need a
each
loan,
month.
it is critical to get pre-approval from a lender
$75,300
experienced in
total
luxury
lifetime savings.
transactions
The
and
common
to have
pattern
clear
here, these are
documentation of
states where
assets and
property
income.
values are high,
Sellers and listing
average loan
brokers
amounts
commonly ask
easily
for proof
exceed
of funds early in the
$400,000.
process
When
to
your
ensure
mortgage is
offers
that
are
large,
serious.
every
If you plan to compete
0.1%
for a high-end
matters.
home,
But let's
come with
not get
proof of
carried
funds
away.
and a
This
lender
isn't the
who
same
can move
story
quickly.
everywhere. In
Owning a
states like
trophy
Minnesota,
home carries
South
ongoing
Dakota, and
costs that
Wisconsin,
go far
the
beyond a
changes
typical
have been
mortgage
far
payment.
more modest.
Arizona's
Monthly payments
property
dropped
tax
by as
rates are
little as
generally
$20
lower
to
than many
$30,
coastal states,
translating to
which
under
can be an advantage for
$12,000
owners.
in lifetime
But
savings.
high home values
Why
mean
so small?
taxes can still be
Two
significant
reasons.
in dollar terms.
First, the rate drop
Private
in those
communities
regions was
add
smaller,
membership fees,
around 0.1
club
or
dues, and
0.2
assessments.
percentage points.
Then there is
Second,
maintenance,
homes there are
pools,
generally cheaper,
landscaping,
meaning less principal
specialized
and
systems
smaller
for entertainment
savings in dollar
spaces,
terms.
and higher
But
insurance
here's the
premiums.
takeaway.
If you are
Even if your
budgeting,
savings
assume
look
materially
smaller,
higher
the
annual carrying
psychological
costs
and
for a
financial
luxury
impact
estate
is still
than
real,
for a traditional
because
home of
any
lesser
drop in
size.
cost of living
Check
pressure gives you
HOA
breathing
and club
room,
rules
and that
carefully.
breathing room
Some
compounds
communities
month
allow
by
club
month
membership to
into
transfer
freedom.
only with board approval
Now, there's
or
one
require
twist most
initiation
headlines
fees.
ignored. North
Possibly,
Dakota.
but many
While
private
the rest
and
of the
gated
country
communities
celebrated
restrict
falling
short-term
payments,
rentals.
North Dakota saw
Even if
theirs
allowed,
rise
high
slightly.
ongoing maintenance,
Just a 0.03%
insurance restrictions,
increase
and
in
guest
APR,
access rules can
from
make short-term rental
6.81 to
economics complicated for large
6.84%,
estates.
but still enough to add
Investors
$5
should check
to
community
monthly
rules,
payments.
local
Over 30
ordinances,
years, that's
and
nearly
tax treatment
$2,000
before
extra
assuming rental
dollars.
income
It's a
will
tiny
offset
difference,
ownership
but
costs.
it's proof that not
If
every
rental
market
income is your
moves together.
plan, verify the local
economies,
rules and
job
run
growth, and
conservative
housing
cash flow
supply
models.
all play a part.
If you are
So
shopping
even
for a
when the
standard
national
home,
trend looks rosy,
focus on your
smart
personal
buyers look at their
affordability.
own zip codes before
Locking
making
a mortgage
decisions.
rate when reasonable,
All right, let's
and
step
watching
back.
inventory
If you're a
levels in your
potential
target
home buyer
neighborhood.
watching this right now,
Avoid letting
what should
headlines
you
about
actually do
ultra-luxury
with this
sales
information?
drive your decision-making
First,
unless you
understand that
specifically
mortgage
plan
rate
to buy in those
changes are
neighborhoods.
not permanent.
Consider these
They
practical
fluctuate with
steps.
policy,
Get
inflation,
pre-approved,
and global
set a
economics.
firm budget,
What you're
and have
seeing
an
today,
inspection
a national
contingency
average
that
APR of
protects you.
6.68%,
For buyers who want to
might
time
not
the market,
last.
remember
So
timing
if you've
is
been on the
hard.
fence, this
For
might
most
be the
people,
window you've been
buying
waiting
based
for.
on personal
Because when
life
rates
needs
drop,
beats trying to
demand
predict the
rises.
market perfectly.
And when demand rises,
Developers and
prices
high-end
follow.
builders
This
watch
current
record
dip
sales
gives you an
closely.
advantage before the
A
next
$14
surge
million
begins.
close
It's not about
signals
rushing.
that high
It's about
quality, newly
recognizing
built
momentum
trophy
before
product
everyone else
can
does.
find
If
buyers
you're an
at the top
existing
of the market.
homeowner, this could
That
also be your
validates
chance
more
to
investment into
refinance.
custom
Even a
estates and
0.5%
high-end
lower
spec
rate can
builds.
trim thousands from
For
your total
investors,
payments,
this
or
can mean
shorten your
more
loan term
supply in the
without
luxury
increasing your
tier
monthly
over the
burden.
next several years.
Let's move
But
beyond
luxury
the spreadsheets
supply
and
is
charts
limited
for a
by
second.
land constraints and
Think
zoning,
about a young couple
so a
in Los
handful of
Angeles who've
high-priced
been saving
closings
for years.
can keep prices
Every
firm
time
if
they
demand
checked
holds.
mortgage calculators,
Here are
the
three
numbers
plausible
didn't add up.
near-term
Rent
scenarios
kept
to
rising.
watch,
Interest
framed
rates
as
stayed
informed
high.
projections.
The
1.
dream of owning a home
Steady
felt
high-end
like it was
demand,
slipping through their
continued
fingers.
interest from
Now,
out-of-state
because of this
buyers
shift,
and lifestyle
their
buyers
dream inches
keeps top
closer
comps
to
rising
reality.
slowly.
$200 less per
Plateau.
month might not
Record
sound
sales
like much
become
to a
headline
banker,
drivers,
but
but
to that
broader
couple,
demand stalls,
it's the difference
creating a
between
sideways
someday
luxury market.
and now.
3.
Or
Softening
picture a family
an
in Boston
economic
who
shock
bought when
or
rates were
materially
high.
higher
They've
rates
been
push
juggling
luxury
payments,
buyers to
skipping
pause,
vacations,
creating
tightening
price
budgets.
adjustments at the
A
top.
refinance
Which
at this
scenario
lower rate
happens
could give them
depends mainly
hundreds
on
back
credit
every
conditions,
month,
local
enough to
job
rebuild
growth,
savings,
and the
start
pace of
investing,
additional
or
high-end
simply
supply.
breathe again.
These are
This is
not
what the data
predictions with
doesn't show.
certainty.
The relief,
They are
the
risk
dignity, the
scenarios
hope that
every
comes when
serious
people
buyer and
feel they
investor
can
should
finally catch
monitor.
up.
If you
Every
represent
decade or so,
sellers, you
there's
can
a
use
shift
this
like
record to
this,
market an
small
estate,
enough to miss if you're
but don't
distracted,
simply copy
but
the price
powerful
headline.
enough to define the
Buyers
next
and
wave of
appraisers will
opportunity.
compare
Most
floor
people
plans,
will read this news,
lot
nod,
orientation,
and move on.
views, and amenities.
But those who act,
The best
those
approach
who
is to show
research,
clearly
plan, and
how your
position
property
themselves
aligns
will
with the
quietly
features
build
buyers are
equity
paying
while
for.
others
Footage
wait
of
for
entertaining
a better time.
spaces, professional
Here's the
staging,
truth no one
and
likes
a
to
strong
admit.
marketing push
can't
to
time the
out-of-state
market
wealth centers.
perfectly.
Work with
But you
brokers
can
who
read
have
the
proven
signals.
buyers in the top
Right
tier.
now, every signal
Outreach
points to
counts.
a rare alignment of affordability and access. Rates are easing. Payments are are falling, sellers are open to negotiation. That combination doesn't last forever, and when it disappears, it often does so fast. So here's my message to you as a financial mentor. Don't chase the market. Understand it. When rates drop, don't just ask, "Can I buy now?" Ask, "Can I buy smart?" Run your numbers. Check local lending offers, compare fixed versus adjustable options, and always calculate not just what you can afford today, but what you'll still feel comfortable paying 5 or 10 years from now. If you already own, don't ignore refinancing opportunities. Even a small rate change could free up cash to invest elsewhere, pay down debt faster, or protect your financial stability in uncertain times. And finally, remember this: the market rewards attention. When you pay attention to data like this, you're already ahead of most. The Lending Tree study isn't just another financial report. It's a reflection of how timing, policy, and discipline create opportunities for ordinary people to make extraordinary moves. So take this as your signal. Learn, prepare, and position yourself before the next shift begins. Because wealth doesn't wait. It moves quietly in moments just like this one. The housing market is always changing, but those who understand why it changes never fear it. They use it. And maybe, just maybe, this is your time to do exactly that.